Merry Christmas, everyone. I hope I'm not disrupting anybody and taking away time from your family. That's not my intention here, but we did get some new news that just came out not too long ago. And also, we've got some other things to talk about, such as manipulation, and that's stock manipulation, and specifically how it relates to FUBO stock. So, without any further ado, let us get started. Hey, what's going on? It's Pat from Top Ticker Trades. If you're new here and you want to learn how to use stocks and options to make your portfolio go parabolic, make sure you start now by subscribing and tapping that bell so you never miss an upload. What is going on, everyone? Welcome back to the channel. Welcome back to another video. This is the official FUBO channel, so if you're wondering about FUBO and how to play it, this is the right channel for you. Now, as I've said before in many of my other videos, and especially recently, when you have a stock that's made a big move, a parabolic move, such as the ones that we expect to see out of FUBO, because we have been seeing them, then you can pretty much expect that there will be some sort of pullback or move back to the downside. Now, I've been talking to a lot of you in the comments, and I see that a lot of you are concerned about this stock dropping. So what I am going to also add into this video today is a couple of things that you can do in order to be able to take profits without necessarily losing your shares or having to sell them. But let's start off with what you guys came here for, which is the new update. Now, I want to get right into it, ladies and gentlemen, but before I do, I would like to ask you to please consider giving this video an early thumbs up, as it greatly, and I can't stress that enough, helps to support this channel. I put a lot of time and effort into each video so that we could all make money from the market together. And if you're not part of the family yet, I want you to join my family. We're growing fast, both as a community and financially by the day. All you have to do is hit that subscribe button, and don't forget to tap that bell so you have access to videos as soon as they come out. So back to the topic of FUBO. Basically, here's what's going on. I told you guys in the last video that on December 30th and January 1st, we are expecting that the shareholder lockup period will expire, which presents a temporary short-term problem for us because it will more than likely result in share price going a little lower. So what are we seeing here right now with this price action? Well, we've had two analysts recently downgrade the stock, which causes some negative price action. Now, this wouldn't always be the case with just any stock, and especially not with a stock like FUBO. We see usually that a lot of the times investors and traders will ignore these analysts, as they often tend to be wrong. But because these analysts are coming out with these downgrades around the same time that we are expecting the shareholder lockup period to expire, or very close to it, this more than likely explains why we're seeing such volatility and so much downside in this stock right now. So already, since my video from yesterday, we've got another analyst downgrade, and these scumbags will pretty much say anything to drop the share price so that they can benefit from the influence that they have over the market. And to prove this to you, I'll be going over what analyst Richard Greenfield just said about FUBO. And I do have to warn you guys, this is pretty, well, stupid for one, but it can sound kind of scary if you don't understand the whole concept of how these things work with these analysts. So first, let me say, do not panic, do not freak out. Why I'm actually telling you guys about this, well, other than the fact that I report everything on FUBO, but I wanted to especially point out how ridiculous this analyst's price target is, and basically should let you know that common sense alone will tell you that this analyst is a complete nut job. He's probably getting paid to write this article, or he is doing this in order to benefit off of this somehow himself, because the price target that he presents to us is, I don't have a word for it. I don't have a word to describe it. I mean, if he really believes this, then he's a moron, but that's a whole nother story, so let me just get to it. So here we go. This dude says that he gives it an $8 price target, and that would mean about a $500 million market cap. But this is kind of confusing to me because FUBO is expected to make $430 million next year, with 80% growth and subscriber growth accelerating to above 60%. So it would appear to me that these analysts are either morons or they're just wanting to tank the stock, either because they were paid to do so or are incentivized in some other manner. We see this happening with other stocks all the time. If you haven't seen so already, you will soon see that it does happen all the time and know exactly what I'm talking about. This is pretty much manipulation of the stock, and there are several reasons for this to happen. But perhaps the thing that bothers me the most, and should bother you the most about all of this, is that these analysts often either get a slap on the wrist, if anything at all, or pretty much go on without any type of punishment or without anybody even acknowledging that they did anything wrong. And that's the circumstance that I'm seeing most often, is that no one even acknowledges any wrongdoing, and most of the time there are no charges brought up against them. And when there are charges brought up against them, most of the time they're not criminal. It's only that they have to pay a fine or something like that, which, yes, the fines sometimes can be, kind of expensive, but I mean, you're breaking the law to the extent of, ripping off millions of shareholders. So I would think that, this should be a little bit more serious. I know if I did something like that, I'd be doing federal prison time. So why do these, Wall Street bankers and people like that, these analysts, get away with it and not even get acknowledged for committing these crimes? Because these are crimes. So that's what I want to point out to you guys and kind of share a couple of very quick examples to make you aware that this is going on. And if you guys want to see or want me to make a video specifically about the types of manipulation that exist out there, and not just through analysts, but other just big money traders, I can certainly do that. There are several different methods that these people use that I think would be helpful for you guys to know, so that you guys could look out for them, because it can certainly make you lose money in the market if you're not aware of what to look for. So let me know in the comments below real fast before we proceed. You guys are more than welcome to hit that pause button and, let me know in the comments, and then we'll proceed with this lesson. So I want to point out a couple of examples of JP Morgan actually doing this, and they literally just got a slap on the wrist. These examples I'm going to show you come from other countries where they were fined some hefty fines, but nothing criminal. And what's most concerning to me is that, they were maybe barred for about 3 months, or prevented for about 3 months from brokering down there, and then we're right back at it. And very recently, JP Morgan was involved in doing this here, which nobody said anything about. They weren't, to be clear, they weren't charged with anything, but they were doing it to a stock that I was personally trading, which was Workhorse, and those of you that follow me may be aware of that. But this should show you that things like this happen all the time. And one of the best ways to beat it, if you're not, able to catch it fast enough, is simply to hold through the manipulation. I mean, the only reason that you should be holding, or that you should be worried about the stock you're holding, is if you don't believe in the company in the first place and it was just a trade for you. But I still wouldn't sell at a loss, because the stock will recover. So why sell at a loss unless you need that capital to deploy into another stock like immediately? Also, if you're using margin, then I understand, you do want to sell because you're taking a risk with losing more money if you're using margin. But if those things don't apply to you, there's absolutely no reason for you to sell. The valuation of that company has not changed between the time that you purchased the stock and now that it's going down. So I'm not sure why anybody would sell just because the stock is going down. It will bounce back, it will recover, and it will go much higher. And to prove that to you, you can take a look at Nano X Dimension, I believe is the name of the stock, where it recently went down to like 20 bucks or something, and all the people that sold really missed out. And just to show you how scary this was, I mean, going down to 20 bucks, that was a lot of people's buy-in. If you're holding a stock where you had a bunch of profit that you didn't take, and it comes down to the point where you bought it and even a little below, I mean, I understand how scary that can be. But if you've done the due diligence, if you've done the research, and you know in your heart of hearts that this stock is what you think it is, then there should be no reason for you to sell. You hold it, you buy in even more, especially if it goes down that low. I mean, buy, and average down if you've bought way above that, because now you're averaging down your cost and you're able to profit when it shoots back up, because I guarantee it will shoot back up. I mean, it's going to correct itself. Temporary price action from this manipulation is not going to continue to hold the stock down when the valuation deserves to be well above it. So that's what you need to remember. So here's one example. Regulators in France have suspended U.S. investment bank Morgan Stanley from acting as a primary dealer in French government bonds for at least 3 months after it was found to have manipulated prices. As a recognized official trader, Morgan Stanley was allowed to take part in sales of French government debt managed by the state agency AFT, which imposed the sanction. AFT said overnight it had decided to suspend Morgan Stanley's trader status for a minimum period of 3 months, which with effect from August 4th, 2020, for transactions that seriously affected the liquidity of the French sovereign bond market. In December last year, France's financial markets regulator fined Morgan Stanley 20 million euros over market manipulation at the height of the Greek debt crisis. Regulators said Morgan Stanley had manipulated French and Belgian bond prices in June 2015 with the aim of causing an abnormal and artificial rise in sovereign bond prices and reselling them for a profit. It said the bank bought up enormous amounts of futures contracts for French and German bonds on June 16, 2015, in just 15 minutes as part of the plan. Morgan Stanley denied manipulating markets and at the time described the fine as disproportionate and unreasonable and said it would appeal. The ATF said Morgan Stanley's regaining its official trader status is subject to compliance with remedial measures. So as you can see, the outcome of this was essentially a slap on the wrist. Basically, all that happened is that France suspended JP Morgan as a dealer for about 3 months, and that's it. Here's another example. JP Morgan to pay a record $1 billion to settle market manipulation charges. So basically, they're set to pay $1 billion to settle charges from U.S. regulators of spoofing in precious metals and treasury markets. And the payment would resolve investigations by the Justice Department, the Commodity Futures Trading Commission, and the Securities and Exchange Commission. The nearly $1 billion sum would be a record spoofing-related settlement and would more closely resemble past penalties for other forms of market manipulation. Now, this was a case from the U.S., in case you guys missed that at the beginning. Spoofing involves making several orders in a market without the intention of filling them, and often to mislead other traders into pushing prices in a certain direction. One source told Bloomberg that the settlement wasn't likely to restrict JP Morgan's business practices and that the bank would admit wrongdoing. In criminal charges against JP Morgan filed last year, the Justice Department alleged that employees on the bank's precious metals desk turned the venture into an enterprise that frequently conducted illegal market activity. After charges were brought against Michael Nowak, former head of the precious metals desk, JP Morgan learned of a separate investigation into its treasury desk. But we all know that nothing will be done about this either, or about any of those investigations. So anyhow, I did want to point all of this out to you just so you guys are aware because of the comments or because of what I was reading in the comments. But now let's talk about how FUBO is being affected, and then we'll get into things such as what you can do if you're holding FUBO shares to still take some profit and not have to worry about missing out when the stock goes down. And this is something that you'll be able to do consistently. It's very simple. Some of you may already know about it, but we'll be going over that. So first of all, I want to talk a little bit about what Rich Greenfield, that analyst that I mentioned earlier, that gave FUBO an $8 price target, is saying. So here's what this article from Barron's says as it describes the situation here. Rich Greenfield and his team at Lightshed Partners initiated coverage of FUBO TV, ticker FUBO, Wednesday with a sell rating and $8 target for the stock price, calling it the most compelling short he has ever encountered. We understand the broader market dynamics to play with cheap money and an exuberant retail investor, he wrote. However, the run-up in FUBO shares is just plain egregious in our view. A spokesperson for FUBO declined to comment. Greenfield is an influential analyst, and the stock is taking his views hard. The shares have slumped 30% in the last 2 trading days to around $44 a share, including a 15% slide on Thursday. The price is still well above its initial offering at $10 a share in October, though that is near to where Greenfield thinks it is heading. FUBO bills itself as offering live sports and TV without cable. The company sells bundles of local broadcast and cable networks starting at $65 a month. FUBO says it now has 455,000 subscribers, up from 288,000 a year ago. The crux of Greenfield's argument is that streaming sports in a bundled over-the-top package ultimately won't be that profitable. The backdrop for bundled plans isn't favorable, he argues, regardless of whether consumers get their TV from a cable company or one of the new direct-to-consumer services like Hulu, YouTube TV, or Roku. The industry lost 2.5 million bundled plan subscribers over the last year. He expects the subscriber base to keep shrinking over the next 5 years to 55 million, eventually bottoming out at 40 to 50 million subscribers. Sports is a big reason that many people still subscribe to cable, along with plans sold by Hulu and YouTube. But none of the platforms are ideal for hardcore sports fans, partly because a pure sports bundle has been impossible to create. He said, the internet-based services have lost regional sports networks in the last year. FUBO doesn't carry the Turner broadcast networks, which broadcast a significant number of NBA, March Madness, and postseason MLB games, he points out, and moreover, the bundled OTT packages are now priced similarly to the cable, including dozens of entertainment and news channels that sports fans have no choice but to pay for. So-called channel bloat raises prices and isn't going away, partly because content owners like Walt Disney can still charge steep fees for ESPN. Greenfield estimates that Disney is charging more than $19 a month for rights to the Disney, ESPN, ABC lineup. If FUBO's growth continues, it could reach more than 2 million subscribers in 2025, but even that wouldn't be very profitable, partly because FUBO won't generate much ad revenue to supplement subscriptions, Greenfield argues. So let me say a couple of things first before I move on to read the rest of his article. So I'm going to address the very last sentence first. He says that FUBO won't generate much ad revenue to supplement subscriptions. Well, here's the thing. Disney Plus and Netflix don't have any ads. So pretty much just like the other analysts said that gave FUBO a $60 price target, I mean, there's nowhere else for these advertisers to go. And this is a $60 billion per year industry. So you tell me what you think, but personally, I think that this dude is full of crap. Now, a few other things I read here that really, stick out that I need to address. So he keeps dogging the sports streaming industry and says that it's declined over the last year. Well, let's think about this logically for just 1 minute. Why would it decline over the last year? Is it maybe because we didn't have sports for, how many months? That's due to the virus. So this moron, well, he's not a moron. He's actually just trying to fool those that don't know any better, but he's still a moron. And now to address all the stuff that he said about sports packages being unfavorable. Well, FUBO doesn't just have a sports package. They're a sports first streaming service, but they do know that, they need more people, or they want a wider customer base than just sports people, which is why they also offer plans for the entire family. So this sports first package, or the sports first service, is pretty much just their way to differentiate themselves. With that being said, what this means is that all the sports people or people that really care about sports are going to be heavily preferring this platform over other platforms, which is why the company differentiates themselves in such manner and doesn't have to compete with other categories of streaming. But then also the sports people that do get this package because of the sports first, or because of it being a sports first platform, they're also going to be able to get service to entertain their entire family, as FUBO also offers programs for the entire family. So it's a solution for everyone, a solution for all. So everything this analyst has said so far is a complete crock of crap. And, we've got a company here, FUBO, with great expectations moving forward, with great, phenomenal guidance, phenomenal growth. And we know that companies like Netflix have done extremely well through the pandemic, that has been a catalyst for streaming services. Additionally, Disney, look at Disney right now, okay? That's how they're able to keep their lights on, is through their streaming services. Remember, they were a theme park and had all this other stuff going on. Well, none of that is available for them right now. So guess what's supporting this company right now? It's streaming services. So if anything, these streaming services are going to continue to grow, and competition is just a healthy sign for that industry. That's all that means, is that the industry is big enough to keep booming. It's definitely a good sign rather than a bad sign. So I don't agree with anything this analyst says. When I see ridiculousness such as what he's, put out there, I know that he's just a manipulator. And he is the same analyst that's tried to downgrade Disney last year. And every time that he's given us a sell rating, guess what? The stock shot up. I think 9 out of 10 times that he's given a sell rating, you can take a look at the chart, it's gone up tremendously. So listening to this analyst would cause you to lose a lot of money. And then I don't recall the exact numbers of how many people are still using, cable these days, but the numbers are pretty high. And all those people are going to have to move over to streaming eventually, and be kind of forced to do that. When that happens, they're going to have to go somewhere. Now, I'm not saying that FUBO is going to get all of those people, but, they're certainly going to get their fair share. And keep in mind, some people can have more than one streaming service. For example, I've had Netflix and Hulu and some of the other ones simply because of what's offered on each platform. Now, this analyst also discounts the entire idea of FUBO getting into the sports betting industry. And what he says about that is basically that there's going to be regulatory issues surrounding that. He doesn't see them having any success in the sports betting industry. And another point he makes is that, he doesn't see this family-centered platform where kids can get in there and basically place bets and, do sports betting. So what I'm going to say to that is, do you not have a platform on your phone, such as Robinhood or Webull or whatever platform you're trading stocks with? Do you not have that on your phone and your family computer at the house? So if you have that, what's stopping your kids from going on there and basically buying or selling securities using your apps? But, that's just one aspect. But what if you are using another app, let's say for sports betting, and you have that on your phone, or I don't know if they have them on computers because I don't do any kind of sports betting, but let's say it was on your family computer and your kids could get on there and use that. I'm sure there are restrictions on those apps which will prevent your children from being able to do so. Just like there's restrictions on your Robinhood or your Webull app that will prevent kids from being able to trade stocks. And usually that's done through a simple method of just making you put in a 4-digit PIN, or maybe using your thumbprint, your fingerprint, whatever the case may be. So I don't think it's, out of the ordinary for a platform like FUBO to have to do the same thing. I mean, it's a very simple solution. I don't think there's going to be any type of regulatory issues. And in fact, I see regulatory issues softening, and sports betting, gambling in general, it's being made legal in all these other states because it's bringing in a lot of money to those states. And money talks, BS walks. We all know that. So I don't see there being any issues. I think this guy knows that. I think that, he is getting paid for his analysis here, or for his buy or sell ratings, whatever the case may be. I think he's crooked, or he's just an idiot. So either way, we've got an issue with what he's saying, and I would ignore it because number one, he's plain wrong. Number two, this stuff has no merit. Number three, well, because he's a dumbass. So pretty much there you have it, ladies and gentlemen. Now we can move on and talk about something else, such as how you can continue to take profits from your shares of stock without having to sell your stock. And pretty much in a case like this, where you see the stock that you're holding dropping, you can actually profit from that and then use that profit to buy more shares at a lower price. So that's what we're going to discuss now. While I have you here, I wanted to quickly tell you about the brand new First Trade app, available for mobile or PC. The platform will give you access to powerful and easy to use tools and allows you to trade with less restrictions, zero commissions, zero fees, and you can use the first link in the description below to download a free stock today without having to deposit any money. This will greatly help out the channel and is always appreciated. And now back to your regularly scheduled programming. So a simple solution for things like this is for you to just simply sell covered calls. You can do this on a weekly basis, and I believe that FUBO does have weekly options available. And while I haven't looked recently, like today, I'm actually about to look and give you guys an idea of how much money you could be taking in. But keep in mind, the lower the stock goes, the less those calls will be worth, and they're, drastically going to be losing value percentage-wise. When FUBO was trending upwards, the volatility is insane, meaning that those call options are going to have some juicy premium on them, and you could have collected a lot of premium. We're talking about hundreds of dollars. We're talking about the further out you go out in time, you're maybe even possibly collecting thousands of dollars, or numbers like $1,500 or $1,000. And that's for calls with a strike price that's, out of this world ridiculous. Strike prices that will guarantee you're going to make profit, and that will that the stock probably won't reach anytime soon. So you're pretty much getting like a free $1,500 or something like that you can put in your pocket, or you can use to buy more stocks when the stock falls. Now all you have to do is go in there, whether you're using Robinhood or Webull. All you have to do is own 100 shares of that stock. Once you own 100 shares of that stock, you can sell what they call covered calls on that stock, using that stock as collateral, basically leveraging your assets. So think of this in the same manner as you would be thinking of renting a rental property or a house. You buy a house and then you rent it and collect monthly rent, except the problem with renting a house is that you're going to have to come in there and be faced with certain expenses, such as fixing things that these renters break, and they break very often because it's not their house, so they don't care about peeing on the floor or letting their dog take a crap on the floor or doing all these millions of other things that they can do to damage your property. But the people that you're selling these covered calls to, they can't damage your stock. The only risk you're really facing, you're facing more than one risk, which these risks to me aren't that serious if you're a long-term holder. But one of the risks is that the share price goes above the strike price, in which you're limiting yourself and you're capping your profit. But, listen to what I just said, you're capping your profit. So in that way, you're not losing any money. You're just missing out on extra profit you could have had. But there's many ways to pretty much work these options. I was going to say manipulate options, but I'm not a manipulator. And when I do say manipulate, I don't mean in any illegal fashion. What I am referring to is, you could always buy an options contract back to close it. So even if it's, is at a higher price than what you sold it for, you can buy it back and simultaneously sell a more a contract that's likely to be more worthless than the one that you just sold previously. And by that, I'm talking about contracts that are further out of the money. You know, the further it is out of the money, the more worthless it really is, you know, at least in theory. But they can be worth a lot of money, especially if the volatility is right and on that side of the trade. So essentially what I'm saying is, you know, you want to think of your stocks as a way for you to consistently make money without having to sell them. So essentially you want to look at your stocks as assets, not as something that, you know, you're going to sell in the short term to make a quick buck. You want to keep using them over and over and over. It pretty much works out to be better if you hold your stock through the ups and downs, and that gives you not only the tax credits that you know, you're gonna want to be able to use, but also you're able to sell these options and consistently collect money. Now, in general practice, you want to use the option that's expiring first, so options that expire as quickly as possible, but at the same time you don't want to sell an option for peanuts. You know, you don't want to sell an option that expires even if it expires in a couple of days for $10, because that's not even worth your time. And let me tell you a story. I was once trading TLT. TLT is a stock that has to do with bonds, and I sold, you know, the options, the closest expiring options were expiring the very next day. And, you know, I was a new trader at this time, and I sold an option for, I don't know, 10, 20 bucks, something ridiculous that wasn't worth anything, thinking, okay, well, you know, I might as well take something. I mean, you know, it'll expire. These options expire worthless tomorrow. I might as well sell some and be able to profit, you know, even if it is a small amount. Well, so I sell this option on my stock for nothing. And then the next day, guess what? These options are worth hundreds of dollars. And by that, I mean like $800 on the ones expiring the next day, because the stock made such a great move. And my point here is that you never know what's going to happen in the market. You know, the market may surprise you. You know, these stocks can shoot up out of nowhere. One piece of good news and bam, it's, you know, through the roof. And now you sold an option for 10 or 20 bucks and you're having to give up your shares at a tiny profit when you could have profited, you know, a huge amount. So basically, I guess what I'm trying to say is don't go in for the small money. You know, if you're going to sell something, if you're going to do something, make it worth your while. You know, sell it for enough money to where it matters, or at least it's making some type of difference for you, not for peanuts. All right, so for you guys that stayed all the way till the very end, first of all, I want to say I really do appreciate it. You guys are the true OGs. You guys are going to be rich and make a lot of money. But I want to know, how is my content? Do you guys really, really, really enjoy it? Should I keep making more content like this? Is it a little bit too much? Is the content irrelevant? Give me some feedback, because I really want to know. I'm trying to improve the quality of the videos. I'm trying to improve my channel as best as I possibly can, but I'm not able to really do that unless I get some feedback from you guys. And that's what I really want. So if you could do me that favor, please, and let me know what you guys think. Let me know how I can improve it. And I appreciate it greatly, and we'll be looking forward to it. Congrats, ladies and gentlemen. You've made it to the end of the video. If you like what you watched, make sure you subscribe, because I put out videos just like this one every single day. And please do me a favor and smash that like button if I helped you in any way, because it really goes a long way in helping the channel out and keeps me motivated to make videos every single day. Now, there's a lot of work involved, a lot of research, and a lot of time and effort into editing and putting these out daily for you guys. You can subscribe from your screen right now, or if you want to watch one of my other videos, I'm sure YouTube has some good content picked out for you on the left-hand side of your screen now. Thanks for sticking it out with me till the end, and I will see you guys in the next video.